In the last week of June 2026, Oracle closed its worst week since the dot-com crash, down 19%. Trading in Seoul froze mid-session, and the strangest part, the men building this bubble had already admitted it was one. 5 companies now make up 30% of the S&P 500. That concentration hasn't been seen in 50 years. In 2025, AI stocks drove roughly 80% of the market's gains, and Nvidia alone passed $5 trillion. The Shiller ratio crossed 40, first time since the dot-com peak. Ray Dalio put the frenzy at 80% of 1929. Then the confessions started. Sam Altman said, yes, this is a bubble. 54% of fund managers agreed, while still buying. Why would the people inflating a bubble admit it out loud? The answer is a machine, a loop of money. In September 2025, Nvidia announced up to $100 billion of investment into OpenAI, its own biggest customer. OpenAI bought billions in AMD chips and became an AMD shareholder. Oracle signed a $300 billion deal. The circle closes. Here's the problem. OpenAI has committed $1.4 trillion to data centers on $13 billion of revenue. Its cash burn is projected to triple within 3 years, while Morgan Stanley counts $3 trillion of data center spending, half borrowed. Much of that debt is junk-rated private credit, and when companies pass the same dollar in a circle, revenue looks real everywhere. Because the dot-com bubble ran on the exact same loop, and one specific thing switched it off. March 2000. The Nasdaq peaked at 5,048. 30 months later, it hit 1139, down 77%. Cisco traded near 200 times sales. Only 14% of new tech firms made any profit. Belief funded the rest. That's what kills bubbles. Not bad news, the moment new money stops arriving to fund old promises. But here's the honest difference. Nvidia isn't Cisco. 47 times earnings, 71% gross margins, revenue up 65%. Yet MIT found 95% of organizations get zero return on their generative AI spending. The customers aren't profiting. And a February study found 90% of firms report no workplace impact from AI at all. So who pays? Bain ran the numbers. AI needs $2 trillion of annual revenue by 2030. The trajectory leaves an $800 billion hole. The market flinched once. DeepSeek's cheap model cost Nvidia $589 billion in a day. It recovered. June's tremors look similar. Here's what history actually says. The railways, the fiber, the data centers, the infrastructure survives the crash that funded it. The dot-com crash didn't kill the internet. It killed the companies that borrowed against a timeline the internet refused to keep. So watch one number, whether borrowed trillions become customer revenue before lenders lose their nerve. Next, we open the circular deals themselves.